Welcome back to another backtesting video on the channel. This is a special one because every time I backtest is special, because every time I touch the charts in a backtest, you guys get to see what true profitability looks like on a simulated environment. Now, why that's important is because in trading, you'll understand is that everything you're doing on a simulated market with past data is exactly, and I mean exactly what you're going to be doing on a live market with data that's still printing. Okay. So what we're going to go or into this video is you guys are going to see my rule set for yourself and see how exactly the way I trade, which is going to be in alignment with the previous two backtesting episodes. And you guys are going to see that nothing's going to change, right? So let's just get that. Let's accept the fact that every time you show up to the charts, you don't have to be trading differently. You don't have to be trying to catch every single zone in the book, selling, buying at every single area you want. Because after all, I could place lines, indicators, everything you could ever imagine on my chart, but that's not what's going to breed profitability, okay? What's going to breed profitability is your rules in the market. So give me a second here. Let me pull up my rules because I actually want to show you guys my rules for yourself so you can see exactly what I'm doing and exactly how I'm approaching the market, okay? So okay, looks like we're having a little bit of technical difficulties on this side. It's asking me to sign in and all that. I don't want to do that right now, so I'll just forget about that. But basically, what I'm going to be showing you guys here, as I'll write it out for you, is if you guys remember in my past trading session on the channel for backtesting episode number 2, I used the weekly, the daily, the 1 hour, and the 10-minute. And the 10-minute is my entry time frame, okay? So what you guys need to define for yourselves right away is the time frames you want to trade with. And that's going to be very heavily impacted with your day-to-day schedule, right? If you're someone who has much more time on the chart, you're able to sit at your desk daily for, say, 5 to 8 hours a day, then sure, maybe you have the ability to trade lower time frames because you're able to stick around for that data that's being printed. For other people, maybe they work during market hours and they need to elevate or step up to a higher time frame, because if you're trading a 1 hour chart as your entry time frame opposed to the 10-minute chart, then every single hour one candle is going to be printed and you don't have to check back on the markets every so often. Where if instead of a 1 hour time frame you're trading a 1 minute, then every single minute a new candle is going to be printed, whether it's in the up direction, down direction, whether you're trying to enter at this high, it could enter you in 4 minutes. But if all these candles represented an hour, it would be 4 hours. So what you guys need to do is you need to have an honest conversation with yourself based off the question is, how much time am I able to invest in these charts or assets? How am I able to be around, or how much am I able to be around for the hours you want to trade, which is essentially going to be directly correlated with the time frames you trade. Now, I'm lucky enough here that I trade a 10-minute time frame, so I don't essentially have to be on the markets for every single minute. I can say check back every 30 minutes to an hour because I know within that time frame there's only going to be 3 to 6 10-minute candles actually forming, right? That's what fits my lifestyle personally, and you guys are going to get comfortable with one and be able to change it later on, okay? Now, to get into the actual trading strategy with you guys, is each one of these time frames, they have a step, okay? So the weekly time frame, what I want to see is strength. So I want essentially a pattern that looks something like this. You kind of have a break. You can call it an accumulation if you're familiar with Wyckoff. And then you want strength that's forming a higher low to eventually take out or anticipate the liquidation of a high, okay? So that's what I simply want on my highest time frame. because once I establish the highest time frame and what it wants to do, then I can wait for the other time frames to be aligned with that story I'm creating for myself. Okay. So if we step down to my next time frame, which is the daily time frame, what's funny is that here, I'll use a different color. I'll maybe trade this in for green. Let's do green. Actually, I'll do blue because a light blue is the video I'm going to be doing, or sorry, the color I'm going to be using in the video to actually showcase the daily time frame. So essentially, when you are in the story of your highest time frame and it's making that, I guess, range that you eventually want to liquidate, what you're looking for on that lower time frame is you're going to see lower time frame structure build up, liquidate, start moving bearish, and then eventually create an accumulation on a lower time frame. So lower time frame orders are going to show bullish price action at this point inside this higher time frame bullish structure or bullish story. Because if you see here, this pattern right here is the same pattern over here. It's just repeating on a lower fractal or a smaller fractal. And if you could guess, once my lower time frame, the blue structure, creates that break on the daily time frame, all I'm doing is waiting for the exact same relationship the daily has to the weekly time frame on the 1 hour in correspondence to the daily. Okay? So this is going to get a little messy here, but I'll zoom in so everyone can kind of see it. So we have that break up in blue. I'll get rid of these here. We have that break up in blue. And then now I'll use green to represent the 1 hour time frame. And you'll have on a lower fractal, breaks going up, it'll start to move bearish. And then it'll create another break up like this inside this weekly leg, the black, which is continuing the blue leg, the daily, because we expect the daily to do something like this for continuations. And once the 1 hour creates the same pattern right here that the daily did right here and that the weekly is doing right here, that's when you have ultimate alignment. Yes, I know the drawings aren't the prettiest, but you guys will see once again, and I did a great job at showing this in my previous backtesting video, how the time frames actually line up and what you can expect and how to get involved when everything does line up. Okay, so keep in mind the time frames we use are going to showcase how long a move like this can actually play out. Because if we go back to the very beginning where we just have the black structure here, if this move is all weekly candles, this could essentially be, if we have a line here, then you have 0 weeks, then 1 week, 2 week, 3 weeks, sorry, years. Let's go years. 1 week, year, 2 year, 3 year, 4 year, 5 year, 6 year, 7 year, 8 year, 9 years. This move could essentially take years to play out on a weekly time frame, right? You never know how long a move's going to take to form or or how long it's going to take for money to come into the market. But you have to assume if you're operating off a higher time frame, which everyone should have a higher time frame context or higher time frame story that they're trading off of, then you need to know that that time frame is going to take a lot more time to actually set up for you and for you to be able to follow it on lower time frames. Okay, so once again, there's my strategy from a time frame perspective. That's the exact system. It's not every part of the system. A lot of it comes from actually being on the charts and trading it. But the reason you guys clicked on this video is so you guys can actually see me trade that system exactly. Okay, so what we're going to do is we're going to see here the weekly. It made this big push up. So it created kind of an accumulation right here. Now the accumulation could be, you could view it as maybe something like through here. It could be through here. It's really whatever your eyes go towards. I see the accumulation through kind of this point here, right? Or even lower. Kind of where price breaks through the 10 and 20 MAs, the 10 being the lighter one since it's ahead of the 20, then the 20 being the one that's slightly lagging behind. Okay, so I see an accumulation through this point. This is telling me that prices on the weekly time frame are now moving higher than what the average of price was over the past little bit of action in this area. That's essentially what it's telling you. You don't have to really complicate it. You can see there were certain parts of this area where the weekly candles were under the moving averages, and as a result of that, you saw bearish structure kind of come down. You had a high, lower low, lower high, lower low, lower high. And then when it reclaims the MAs, you see that it makes bullish structure, higher highs and higher lows, right? So we're kind of operating off that foundation. And as you see here, if you remember from what the diagram I just drawn from you guys, is that if we go back to what the weekly structure wants to do, it's essentially telling us that you have this big impulse, this big range. It's making a higher low right here. And we want to now liquidate this high, which is going to put in, hopefully, because nothing's ever certain, this market could fall down bearish and never recover. Hopefully, it's going to create bullish structure that we can follow. Okay. And then this would be the second high that we're looking to target. So I'll put, I'll mark this as a 2. Text box here, 2. I'm going to organize this as best as possible. So I'm just going to group these up. Perfect. So now I want to know, because there's a lot of price action here. So I know that I could try and condense these by using a higher time frame. So I'm going to go up a bit to the 2-month time frame. Like I said, you could use the 1 month, you could use a 3-month. You just want something that's, I guess you could call it a multiple of the time frame you're actually using. And you want that multiple to be, I guess, you want to multiply your time frame that you're using in a way where you're not going to get too much condensing on the chart. Because if I went from, say, a weekly time frame, which I was on, to, let's go, a yearly time frame, right? You can kind of see that the structure on the yearly time frame wants to move bullish, right? Because you have this higher high, higher low, higher high, higher low, higher high. But if we go to, say, a 2-month, you can see within that yearly push, you're getting lower low, lower high, lower low, higher high, higher low, higher high. Thicken that up so you guys can see it. You want to be able to use time frames in a way where you can see the moves. I can't see if I went from weekly, where it's kind of messy, you could say, to a yearly. It's just skipping too much data in between. So if I use a time frame kind of in the middle, I'm able to see that inner structure of that yearly leg showcased in purple here. So I'm able to get involved in the moves it's making, right? So here we are on the weekly. It makes that big push. Now on the daily time frame, we can see here that we've kind of went through a breakdown. It's kind of done high, lower low, lower high, lower low, lower high, lower low. And then it's kind of playing around here. So what I want to see on the daily time frame is I want to see a big impulsive move that showcases money's buying this to the upside. Because if you can remember, now on the daily time frame, we want to watch that bullish structure, the higher highs and higher lows that transition into lower lows and lower highs, return to higher highs and higher lows. Because that's what's going to carry out the weekly higher high and higher low. It's literally almost as simple as that. If you guys can understand what I just tell you, you're going to be able to understand how orders are being inputted into the market and why that the wrong thinking is to see, or to say that since you saw this big weekly move, that it must come down, right? I think in science class they say Newton's law. So in science class they say Newton's law, or part of Newton's law, I can't really remember, is whatever is in motion stays in motion. That's kind of like a market. In the market, or in stock terms, they call it Dow theory, where, a trend that is moving tends to continue moving in that same direction. That's essentially what we want to look for, because the long way to do it is to watch a move like the weekly time frame here, make a big move, make a move down to create that, what we like to assume as a higher low, and then think you can start getting short right here. I'm going to change this. I don't know why it's this color. And start getting short right here because you're predicting that this bullish market with all this money coming in is essentially just going to melt down. That's not how markets tend to operate when real's money is flowing in one direction. That's just not what happens, right? When real money is getting positioned by composite operators or hedge funds institutions, they need to take this market in a certain direction to be able to, I guess, take money from other retail traders that are pretending or assuming or hoping this market just liquidates down, right? So back to the daily time frame here. This daily time frame, we are going to wait for money to come in. So I'm just going to play candle by candle here. Just chopping around. Okay, boom, money comes in. Big push, right? So what we're going to do is that this is the first push on the daily that took out this high. So we're going to mark that as overall accumulation through this zone right here. Okay. So what we want now is we want to see a retracement on the lower time frame. A lower time frame than the daily, which we use as the 1 hour here. Because you see the 1 hour inside this daily leg, it's already made bullish pushes, right? Now this thing can continue or it can fall down, so new money can get involved, right? Because what sellers tend to fail to realize is they don't see that initial buyers stepped in right here. So when the price is all the way up here and they see the market try to sell down, so they see maybe the market starts to sell down a little bit, they're unaware of all the buying positions that got involved here and want to get re-involved in this area here to take this market up. So that's how sellers lose money, is that once they enter the sell, say their stops like here, here, all of it gets liquidated, right? So that's why it's important that you always want to stick with the trend. Always. There's no reason. Trading is hard enough as it is. If you are thinking that you're going to one-up the market and get involved on both sides of the market every single day, 24/7, it's probably going to lead to a lot more losses than what you're actually going to expect from your backtesting data if you start thinking you're some genius guru on the live market, okay? Sure, you can become profitable trading both sides of the market, absolutely. But when it's so hard to become profitable in general, why are you adding more variance or more obstacles for you to be able to extract money from the market, right? That's essentially not how the market's going to move. The market takes money from the weak hands to the strong hands and moves it in one direction. And if you think you are going to one up the market and go against the direction, then it's only going to work for so long. You will catch winners. Oftentimes, you'll be left wondering why you're on the wrong side of the market. And your winners will never be as big as, your losers will never be as big as the winners are, because the losers, when you're on the wrong side of the market, are only going to go so much in the opposite direction. Whereas when you're on the right side of the market, it could essentially move infinitely in that direction without ever taking your stop loss, right? You have a greater chance of that happening, that situation playing out, opposed to trying to go against the trend and hope that your stop loss doesn't get taken when you know the smart money or the big money is against you, okay? So let me take a drink here, talking like a maniac. Lids on. What was that? I think it was like Klay Thompson held the water bottle. No, it was someone in an NHL team held the water bottle. Lid still on. Doesn't work. Embarrassing. Okay. So now on the 1 hour here, we have that bullish push. We're gonna see. I'm gonna get rid of all this here. See if we can get that breakdown. Does it ever break down? No, it doesn't ever break down. Doesn't. Still holds that maze. Gonna get rid of this. Rid of that. And we're simply just gonna wait for it to break down. There's nothing else to do. Okay. So this daily time frame takes off. That's what's gonna happen. Sometimes you're gonna miss moves. Now we're all the way up here. And you'll see from the previous weekly leg, it went on for quite a bit here. So I know this market can make big moves on the weekly time frame, and those big moves on the weekly time frame are going to lead to multiple higher highs and higher lows on that lower time frame. So this market can definitely continue to keep going here. What I'm going to do is this is now creating a nice pause in the price action. So I'm going to say that this is the second high that can be ran on the daily once we put in that higher low. So I'm going to drop to my 1 hour time frame here. Beautiful push, by the way. Pretty good. It starts kind of getting wicky up here. Not crazy. Still tradable. Probably led to a lot of winners for people who are actually trading it in this time, which was July 15th, 2024. So, yeah, GG's to people who caught this market, I guess, back then. Because, I mean, money's flowing into it, obviously. And if you're able to get a part of it, be a part of it, then, I mean, what else is there to do? That's the goal, right? Get involved in big moves. So we see the 1 hour, it kind of accumulates through this point here. It's creating a nice high. This would be the first high on the 1 hour time frame. Now, the 1 hour time frame is, we're actually getting pretty close to a trade here, or a potential trade, because now the weekly time frame, it's moved bullish, right? It created that higher low, and it's kind of moved away from it. The daily time frame here is now in alignment, in deliverance of this weekly leg. And then the 1 hour is lined up with the daily now by creating this bullish push to run this daily leg, which is completing this weekly leg, right? So you see how everything kind of lines up, and the story that's kind of the market is telling us, and how we don't want to, we don't want to rip the story apart. We just want to be a part of it. Think of it like that. You just want to be a part of the market. The market's going to do whatever. And if you can be a part of it, I mean, you'll make money. So let's go to the 10-minute time frame. See here, it actually broke down. So one thing I'm actually working on in my current trading is when to understand the certain certain situations you actually want to step away in the market. And from one of the ways my testing has shown me so far is that when price kind of makes a big close under the 20, then I actually expect this to actually chop around a little bit before it runs this weekly high, or sorry, hourly high in that daily leg. Okay, so I expect this time frame to actually kind of chop around, and the fact it's failing the 10 and the 20 means selling pressure is increasing, because if this candle closes under the 20 moving average, it's literally telling me price is at a lesser average than the past 20 candles. So sellers have obviously stepped in to some degree, to the point where, it's been able to do that. So let's just play out these candles here. So you'll see it's just chopping around, right? There's nothing to do here. And then big push. I'll leave this on there, actually. I'm just going to create a little. Let me take a step back. And I'm just going to make sure I group all these things here. You guys can't see it. Oh, no, sorry, you can't see it. I'm filming on for a TikTok video as well. They won't be able to see it, but people watching on YouTube can. Then we have this. Group that under the 1 hour. Don't you guys love trading? Takes up a lot of time and a lot of headaches. Okay, so this 1 hour is making a push now. This first, well, we actually haven't gotten a high on the 10-minute yet. So let's see here. We can create something. I don't see it. I want to see on the 10-minute a low get taken, because that's what's going to tell me that the inner structure went from bullish to bearish. Clear signs of selling. That's what I'm looking for. So right here. So this trade actually meets my rules for a buy right here. Now, am I going to buy this market? Well, I could, and it would be a valid trade under my rules, because you'll see the 1 hour is now delivering higher highs and higher lows in accordance with all my other time frames, which are doing the same thing. But you'll see this entry is a little higher up. It's not down here. It's a little bit higher up. So it's already delivered a good, decent portion of this hourly leg here. Now, that doesn't mean that it can't continue and keep going, because it definitely can. But it could possibly mean that this has already made a somewhat decent enough move to where price wants to actually come down again and then reset up lower to then create maybe the second run on the hourly high here, right? Because we have the first one, creates a high, runs it. We want to create a second one. And I'm thinking right now, and this is also something I'm working on my trading, if the entry is too high for me to answer, to enter. Because if we're looking at this, right, if we're looking at this chart as an average of price movement, then the hourly typically, makes moves even a bit less than this trend line right here. So this has already made a move similar to what other moves on the 1 hour have made. Now, these ones were a little bit bigger, sure. So this 1 hour is telling me that it may just want to, come down a little bit. So that's what I'm going to allow to do. Not going to take the trade. Boom. So we actually saved a loss by understanding where this setup was happening and not going to take the trade, right? Because you guys will see, I'll go through it one more time. The average move on the 1 hour, at least in the last daily push here, the last daily push, all these 1 hour moves kind of made a move the length, which is less than this trend line here. So somewhere we'll call it this the average. So when price on the right hand side makes another higher high, which is somewhere around there, and for my trading style, I need a 5 hour R out of the markets, then this move happening just becomes less probable in my mind, right? So good trade skipped. We can delete that. And then we can see in this area here, it created that secondly hourly high that we want to run. But this 10-minute time frame has now failed the averages, and I expect this to chop around. Now, it doesn't have to chop around. It could just go and go. But oftentimes you'll find that the market sits at rest for a bit before it takes off again. Okay? So let's kind of see what transpires out of here. And you actually get complete failure. So this is a big failure, which makes me actually want to go to my 1 hour now, and you'll see the 1 hour has actually invalidated. Okay? So now we have the weekly in this second run, or second leg, sorry, which failed the high. The daily hasn't broken down yet. The daily is still creating that weekly leg, but the hourly has failed within this daily. So the daily now, you'll see here, the averages are kind of in this area. So if the 1 hour fails to kind of somewhere around here and creates another bullish structure, then I could look. But until the 1 hour proves bullishness again on top of those daily MAs, then I'm not going to touch the market. Okay? So let's see what happens. It's probably still good on a daily. If it fails this, it's probably a little less good. Okay, so price does that, which is where I'd start looking. I just want to make sure the daily looks good. Daily's kind of pausing here. Something about this market tells me that the daily wants to pause maybe here, do something like this, like that, and then go, right? The weekly has created has taken the low of a previous candle. And essentially this, I gotta stop saying essentially. I say essentially too much. Certainly, this daily structure has now kind of put in something bearish. These MAs are kind of moving sideways. So I don't like it. Completely honest with you guys, I don't like it. I'll probably skip this. Yeah, I'll probably skip it. Okay. So we have this move now. So we can call the daily, it's kind of accumulating through this point here. And accumulation happens whenever you kind of have like a base. So say you have price, kind of moves down a bit, it just creates a base. Like you can even call it like if you're a support and resistance or you came from support and resistance, then there's like support here. And then it kind of breaks through the top like that. And then this leg here would be like the first part of the accumulation leg. Okay. So now that we have that accumulation, we have the first daily high to be able to run, which actually is kind of wiki on the 1 hour here. So what I would do is I would hopefully have price get away from this area a little bit, maybe like play around here and then create a breakup that I could follow while on those daily moving averages. But okay, just fails down. Yeah, okay. Daily invalidates. So that weekly time frame is now putting in that higher low. The daily could have just went. I want everyone to know that from this point here, the daily could have just went and continue putting in higher moves, but it chose to fail down. I'm not here to predict the market. I'm just here to trade what it shows me. And right now, that's what it showed me. So I'm just going to go off what I see and stick to my rules. So since the daily is moving bearish, right, it's kind of created, you can call it a distribution through this point here, because you'll see, again, if you want to call it a base, it creates this kind of roof here. If you're a support resistance trader, it creates a roof and then breaks down. I even stepped away from the market right here, like at this point, once it kind of went up, higher low, higher high, kind of lower low, sorry, lower high, kind of lower low here. You could have still looked for trades there. I just, I wanted something a little bit cleaner. Then it just fails down. So nothing to do. Chops, chops, boom, break up. Okay. So on this break, we now have a break through a base, right? So this would be considered a base. Breaks through the base. Sorry, creates a base, then breaks through. 1 hour, moving bullish. Let's let the daily leg play out, create a higher high that we can target, and then drop down. Okay? So I don't know if that's created anything. Okay, hold on. Shoot. Okay, whatever. I'll just leave it here. So this is a reset here. So the 1 hour fails here with this break under the 20 moving average and this sideways. But then it starts breaking up. So this would be the first break. That's the accumulation break. This would be the second break, kind of ugly. And then this would be, this would be first break after the accumulation. This would be the second. Let's see how the 10 minutes moving. Kind of, it's okay. It's not the best. This is a little bit choppy. Fast move down, recovers right away. If we, on the 1 hour, can get a move down to the averages, like one more candle. Oh, spikes up. Okay, market open spikes up. Okay, that's fine. This could be one whole leg on the 1 hour. Let's go to the 1 hour. You'll see this could be like one whole leg. There could be a different time frame that shows it better as well. So this could be like a 2 hour. Maybe not. Could do like 90 minutes. 90 minutes. Playing around with orders, it's sometimes hard to find the perfect time frame. But since price didn't reset here, I would consider this the second high. So let's wait till price kind of fails the averages. It's not failing the averages yet. It's still on them. On some fractal, it failed them, though. This would be, so this second high here, I couldn't trade it because no reset ever happened. No, I guess bearish price action on the 10-minute happened. It just kept pushing above the averages. There's nothing to trade here. For me to be able to trade this, I want to see a deeper kind of pause in price and then be able to take off. This was, I guess, a pause in price. This down move here fails. It recovers right away, though. I don't see anything there. And then, yeah. This third high here. Since the MAs, they just kept going straight up. I would even consider this the third high because you'll see here every time we get a 1 hour high, resets under the MAs, takes off. This looks like a reset, but it doesn't come under the MAs. It moves sideways longer than this candlestick does here, though. So that's why I would consider it on the 1 hour a second high. This isn't enough sideways for me. This is just showing continuation of this second high or delivery of this second high here. So let's see if the 10-minute can come under the MAs like that. Okay. Price is kind of moving sideways here. You'll see once price kind of fails to get out of a certain area and just keeps going up and down, it's just choppy. There's no money coming in. You guys will be able to see when money's coming in, right? Because you have a market that moves, comes down, and then is just playing around. There's no big money involved yet. When there's big money, you see it, right? You see the orders of the big money coming in because then all of a sudden price will do boop, right? Down here, there's no boop. Over here is clear signs of money coming in. So when you guys are just playing around in an area like this and trying to, buy the average, sure, it could play out. But would I call it the clearest moving market or clearest, potential delivery of a higher time frame structure? Probably not, right? That's why we wait. We wait for signs, right? And big pushes that, are displacing other highs on the chart. And when I say displacing, I just mean coming up above them. If this is a down candle, up candle, up candle, up candle. For this higher high to get liquidated, it could be liquidated with just a shitty candle and then come all the way down again and do nothing, right? Just become choppy. But if you have multiple candles taking out this higher high, that's what we call displacements, right? So strong closures above highs is what you can consider displacement. Let's get rid of that. And right now I see no displacement in this chart. And then price just takes off. This here, let me just replay this. So this here should have been a trade for me, but I missed it, so I'll just disregard it. I missed it because price failed the averages, came back up, rested on them, and then went through it. But it wouldn't have been a trade for me anyways because it's that market close. I don't trade near market close because oftentimes near market close, you're going to get big moves in either direction, which is going to take you out, gap you out the next day, possibly, or just, get you involved in the trade on the last candle of the day, and you're just going to be stuck there. And you're going to you're going to come to the market tomorrow morning and have no idea what's going to happen, and it's just going to, kind of scare you out of your position unless it's something you've repetitively tested. But, from my personal experience, not a lot of traders, or from what I've seen in the trading community, not a lot of traders has specifically tested that moment. And I oftentimes see more so questions from, I guess, more amateur traders pointed towards situations like that when they could just go test it themselves, right? And if you do go test it, you may understand that something like that works out too, right? It's not something I've tested. Like if you get entered on this last candle of the day, it can gap up. It did right here in front of us. But oftentimes what you're going to see is also chop. And I personally don't want to put risk on something that could just chop. And I feel like the time of day at market close could influence, although chop can come at any time of the day, it could influence or have a higher influence of chop happening right there and then. And I feel like that's just avoidable. I don't need to be involved. Okay. So 1 hour delivers again. We've now failed to get involved in this move here. So yeah, we failed to get involved in this move here. So what we need to wait for is the daily time frame to come make a higher low with this blue structure here that we can then look to get involved in. So boom, creating that higher low right here. 1 hour comes down, makes big push up. It's choppy. Let me look at 10-minute. No. This does not look good at all. Choppy. What's going to happen here is I can tell from this wick, it's just going to chop. Watch. Okay. Fails. Same thing. It is holding the MAs and pausing. Still haven't taken any trade yet here, by the way, guys, which I think is like super important to know. I've literally have gone through so much data. Let's actually pause and look at this for a second. So started looking here, right? Yeah, at this higher low on the weekly. So we've gone through, so started July, about 2 months of data. We've got a no trade. Like what? Most traders can't fathom how long they actually have to stay out of a market until their rules are met. And even when their rules are met, they don't understand that just because all of your rules are met doesn't mean it warrants an entry. There's much more things that go into an entry when we talk about taking and getting involved in an actual trade, right? What's the environment of the chart looking like? Okay, is it wiki? Is it clean? Are these the right hours of the day that I want to trade? What's the relativity strength to the overall market? These are all things you want to consider. Okay, so we got to pause on the 1 hour MAs. Sorry, wrong chart. And we have this move happening here. If something sets up here, I have no problem taking it. Just because this market is moving strong, right? Strong pushes, pauses, strong push. If something sets up here, if we can get a little boop, 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 I'm in right there, right on this high. Put my stop there. And then this is like my first real opportunity in getting involved in a trade, guys, which is pretty crazy, right? The daily started getting in alignment with the weekly down here. Wasn't putting in like clean resets on the hourly, except for this one here. This was clean. No, I guess sorry, on the daily, this was clean, this was clean. But on the 10-minute, wasn't putting in like clean resets here, which even from August 15 to August 26, so about 11 days of data from when the market was already super bullish, because through this point here, the market's looking super bullish. You get that accumulation on the daily, crazy move up, resets here, right? So that's this point on the daily. Resets, goes on a crazy run, and all I could do was watch it, right? Most traders can't sit back and watch something move that much and not be able to get involved, right? They feel it in their gut. They feel FOMO. They feel like, how did I not get involved in this? What am I doing wrong? You're not doing anything wrong. Someone in trading is always going to be involved in the moves that you weren't able to get involved in. And trading becomes very personable when you have that rule set laid out for yourself. Because my rules aren't going to be the same as your rules, and your rules aren't going to be the same as my rules. And if your rules allow you to get into a trade that my rules didn't, that's when you are able to execute your edge and I'm not. You are able to add to your bottom line, your equity curve with a win loss break even, and I am not. But when my rules are met, that's when I'm able to add to my bottom line, right? Trading is very, very personable, right? And everything you do is going to come from a place of how you see the charts. And in a world so subjective as the markets, no one person is going to see the same thing twice, right? Meaning that you and the next person are never going to look at the market the exact same way. That's why learning from multiple people is so detrimental to yourself. Because if someone is teaching you something one way, and we know that trading is not universal, as meaning everything's the same, you could do everything the same, and it's actually very, very different person to person. When you mentorship hop to that next person, whether it's, whoever in the industry, you are cheating yourself out from progress and starting back at ground zero. You need to find consistency with the concepts you are learning. Because if you can't believe in one thing, then you are not going to be able to stay sold on one thing and being sold on your system and your strategy and being able to execute the edge through the random probability swings of win losses and break evens. That's what's going to make you as a trader. But if you're doing all of such sorts and not truly knowing what's right and what's wrong, you won't be able to go through those, swings of break evens, losses, and wins because you don't know the true bottom line or what true profitability looks like when you stick to one thing. Okay. So that's very important. Now, back to the 10-minute here. It's creating this high, and this is going to give us the chance at our first trade today. So let's see. Fails. Okay. So it fails. I would have canceled the trade right here, but that doesn't mean it can't reset up again. Okay. So we're going to play the next couple candles here. Fails again. Done. Okay. So nothing even set up, right? It came down, had the chance to do this, and did that. So there's no trade, right? Now the daily still looks good. This daily is still coming down to a rising moving average. Okay. The 1 hour has now created a bearish move, meaning low, lower high, lower low. That needs to be aligned with the daily. All you are doing is aligning time frames. It's majority of it. If you can just learn to align time frames, get one entry model, and know how to manage your risk and not be an emotional little bitch, then that will do so much more for your trading than you could even imagine. You are like 75% there, maybe higher, 80% there. Okay. So let's wait for this hourly to become aligned. Okay. Makes a move, then fails. Makes a move. Beautiful. This is beautiful. Strong move on rising averages. I know there's a daily moving average doing something like this. Look, exactly that. Strong move comes up and it looks like it's creating a nice pause on what's going to be rising MAs. Resets under the 10. Let's see if it creates something that can, okay. This is too much down for me. If this candle was a bit shorter here, let me see if I can white out this candle here. Come on. Okay. If this, let me move this above everything. Visual order, bring to front. if this was like that, this 20 moving average would be kind of coming up more. And then this 10-minute would probably be, it closed all the way down here. It wouldn't be sloping down as much. This would show that price held something here, right? But since it failed so much, I mean, based off the moving averages, it's not telling me that it's very strong. It's not showing me that it's very strong, meaning that it doesn't look like there's a lot of momentum behind it. And trading is all based off momentum, right? Strong trends are, made in times of momentum. Whenever there's no momentum in a market, look at it. Okay, so let's highlight the times of momentum. Momentum, 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 momentum. No momentum, just pauses. Whether you buy or sell the market here, you're taking a loss, most likely. Okay? Now, momentum, kind of sideways momentum, 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 momentum. Times you could make money. No momentum, fails down. Doesn't continue downwards. It actually starts going upwards. Momentum, 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 momentum. Fails the momentum, plays around. Momentum, 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 momentum. You want to trade the market in times of momentum, okay? And this, I can just tell, doesn't look like momentum for me. Okay, fails down. 1 hour time frame, failed those moving averages. Okay. Daily fails down. So now I feel on the daily right here, we're in a similar position as we were down here. Creates this higher low, makes a push, and then fails. Creates this higher low, makes a push, then fails. So I feel like these moving averages could roll over a bit. We could get a move like this and then take off like that. Let's see. It's funny. Once you know what you're looking for and the market gives it to you, you expected it. The bias came true. In certain situations, the bias won't be true. And a lot of times as traders, you need to understand that majority of the time, the market is not going to do what you think it's going to do. And you capitalize off the times it actually does what you're expecting, right? It's all about anticipation. And the times you become impatient or you FOMO are the times that you go against yourself and your own strategy, right? Because if the market's not doing something that's in alignment with what you expected, then why are you trading it? Your bias is invalidated. Everything's invalidated. Something's going to be wrong in the fundamentals of your system, right? Because if you're going against what you expected, then you're just trading anything and everything at that point. I'm not taking a trade on the chart unless what I think is going to happen starts proving to happen. So a lot of you probably just need to wait for the market to prove itself to you rather than forcing yourself upon the market, right? There's no reason I would have forced myself in any buys in these scenarios here, right? There's just not proof of it yet. But when price makes a big push like how it did right here, that's a sign that money has entered this market. This market has increased in the matter of 6 days, 10%, right? Now, a market that makes a push like that and creates a structure leg, because a structure leg can happen technically from anywhere, right? If all a structure point is like a push, that this is always being made anywhere and everywhere. And in a bullish market, if we see a bullish structure leg get made, then that tells us something, especially when it breaks through all these moving averages. So this is a big topic because it almost directly correlates to how well you can execute your system. If your system is kind of, rule based like any system would be, then there's certain things that have to be kind of put in place in the market before you can take the trade. And if you're skipping parts of your system, you're losing money because in this industry, you get paid to follow rules. And if you're not going to follow your own rules, then you're never probably going to make money in the market. And if you do, you're going to end up losing it. And trust me, been there, done that, seen it happen to many others. And it's just kind of the way the market flows. the market rewards people who follow their rules. Okay, so let's wait for a daily reset here, or sorry, a daily pullback. Get this. This is the accumulation break. This is the first high that can be ran. 1 hour time frame, hopefully kind of weird one here. This was a big sell-off. Made like the 10 go sideways. That was ugly. Gonna take note of this for a second. Yeah, it kind of grinds up. No clear buy. Yeah, that was ugly. I guess like if I was trading this market, this would be my entry, but this sell-off was bigger than the previous sell-offs, which tells me that this may just need a second, and you'll see it's just kind of chopping around. So wait for money coming. Okay, this has became a choppy market. Fast move up, fast move down. Yeah. What's the 10-minute doing? 10-minute is kind of resetting now. Should move down. 1 hour. It's creating kind of an accumulation through this point here. Mark that in green. This would be worth a trade. I don't like the chop that happened here, but I mean, this is the next day. It's actually 2 days later. Kind of moved away from that area, not by a lot, but it is in a new leg. See if anything can arise from this. No, I don't see it yet. The moving averages are kind of just moving horizontally. I want to see the moving averages curve up like that. Sell through, sorry, buy through there. Ooh, no trade. There's no trade here. I mean, there is a trade here, but not for my rules. So for my rules, I need to see a 3-candle setup. First candle, I need to see a high. So a high would be, described as 2 lows on either side. So I get a high, then I get a low here, which this is where the candle opened. So if I saw like this candle open here and then take the low, which already had happened with the body of the open, if that's the way this candle opened, which it was, I then need the third candle to then validate the trade and go past that high, right? It's just the way I like to do it. Keeps consistency in my entries, discipline. So that doesn't create anything for me. And then this trade is too high up. It's not bad, actually. This might be worth risk. Let me see. I could see this being worth risk. Up there. Yeah, this is worth risk. For sure. So yeah, if it validates me. Oh, breaks down. Okay. No trade needed. So it's kind of looking weak. The follow-throughs haven't been big. See if something else can set up before it falls below here. Deeply, at least. Okay, here. Okay, here. This would be a trade. Because the 1 hour MAs is probably holding. It's not holding the best, but let me see here. I want to be honest with myself. Fails. Does it come down again? Fails. Hmm. Yeah, this wouldn't be a trade. Only because it failed the MAs here, and I don't want to trade this first accumulation leg. I want to, so I'm actually going to create missed trade folder over here. Missed trades. Yeah, what I thought was going to be the first trade, which looks like it's kind of playing out, isn't going to be the trade. But since it, like, I got to find out in my rules how I can be a part of these moves. Because look, it's kind of like this move down here, right? You're like, move up, comes down, fails the MAs, resets something up here, and then goes off again. This is choppy. I guess this 10-minute move. Not bad, actually, on the 10-minute. Whenever I see, like, a lot of down candles with minimal up candles, it's always a sign that the lower time frame could be chopping around. But this actually doesn't look that bad. I don't like this. This looks choppy. Like, I don't know. There's just something about this market that started right here that looks choppy to me. I feel like this market doesn't look the cleanest. Let's see. Should just chop around. Yeah, I'm thinking the 1 hour like fails down here. Yeah. 1 hour fails down. I can almost see it. Like, I don't know. There was just something weird about this market. Up, down, shortly after. Up, down, shortly after. Big move, down, chops, chops, chops. Big move down. Comes up, comes up. I don't know. This was like the indicator that this market wanted to chop around for me. This big down move right here. Usually when you see like fast, explosive moves in the market, it chops around afterwards, and that's exactly what happened here. So yeah, no trade there. Then it looks like a bearish 1 hour here. We're like 3 months into this asset without a trade. It's kind of crazy. But what do you do, right? So yeah, I see the 1 hour kind of failed the 20 here. I'm expecting the daily to just kind of go sideways and set something up later. It does. No reset on the hourly though. So this would be the first accumulation. This wouldn't be a second high just because the 1 hour didn't reset. So I would keep playing this out like it's one whole leg here. You see the daily's making that lower low. Sorry, higher low. Here. Hoping the 1 hour can align there. I feel like I just repeat myself this whole video when it comes to actually time frame alignment, because that's really like all it is, guys. A large bulk of it at least. Okay, so you get the first high target on the 1 hour. Get the accumulation out of this area here. If the 10-minute created a setup here, I take it. That's a trade. Yeah, so this would be a trade. This met my rules, and I just fast forwarded price too much. But if I went down here, I'll walk you guys through it. I've been very honest this whole back test, so I don't have any problem with sharing this with you guys and taking this trade because it could just break me even still. But the 10-minute makes this push. puts in this potential higher low, fails it under the 10. So I expect this to kind of chop around more. If I wanted to wait, then I would need kind of a high again with higher low and then be able to buy stop through there. That's exactly what I would have waited for. Okay. Not yet. Right now. That would be the trade. And I break even. So it's a break even. And let me just make sure. Okay, so this, I don't take trades after 2:30. So this was at 11:50 in the morning, so that's fine. That was my first trade. Literally my first trade on the asset. Now this wick came deeply under the 20, so I kind of expect this to chop around a bit. Comes right back up. We could look for another trade here because I know we're on rising averages of a daily. Whenever you see a lower time frame kind of reset but not come deep, you can always assume pretty much that you're on higher time frame moving averages, which would be the daily in this case. So I'm fine to like continue looking to validate this higher. Accumulation through this point here, smaller obviously, right? Didn't play as long around as much as this did over here, but it's still following the same concept where you have kind of a base forming in terms of support, base forming, and then it kind of breaks through the top part of the range right through here. I don't like talking about support and resistance. I don't trade support and resistance, but I feel like if you're watching this video, maybe you come from a support resistance background. I could trade support resistance if I wanted to. Like, it would actually be very simple and I could definitely become profitable doing it. But why not, do it a different way than everyone else? Many support resistance traders have no idea how to actually trade support and resistance either, just so we know. A lot of support and resistance traders just trade both sides of the markets. They're talking about floors, talking about roofs, getting entered in a bullish market on the sell side. A lot of support and resistance traders are totally lost in actually being able to read order flow of a market and understand what side money is actually coming in on and finding specific points in time or areas where they're actually able to enter rather than just marking up, lines all over their chart in every certain area. Support and resistance traders literally go like, oh, okay, fell down here. Okay, so we're going to sell right there. And then, oh, there was a push right here. This is now support. So we're going to buy whenever price comes here. Oh, price made a move down right here. So this is definitely a sell to come take out these lows. That's not how trading works. And if chances are, if you're trading this way, you're losing money 100%. If you're a support and resistance trader and you're doing anything what I just said, please stop. Let's get rid of that. Let's see if we can get through to this second high. So it kind of came down, created this. Fail is crazy. Holy smokes. This price action will only matter on a break if we're still above the daily averages. But since price just melted, I know the daily just failed. Yeah. One thing I need to work on in my strategy, probably what I can add, just to start getting involved more, is participating in those that first leg that crosses the averages, right? Because that opens up this leg to me, this whole leg. That opens up this leg, and even this leg, even though this leg didn't carry on as much as this leg did before dropping down. But yeah. Okay. So we're only one trade in. We started this back test in July. So July, August, September, October, November. Oh my God. July, September, October, November. 4 months on one asset, and we've taken one trade despite this whole market moving bullish. Yeah. Okay. So that's that. Let's wait for the daily to become aligned with the weekly. If we guys probably should have went to the weekly time frame a bit ago. Let me take everything off. So we started here, higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low. One, two, three, four. Okay. So I wouldn't consider this overextended yet, but I would probably put that as the third high, this as the fourth high, and then this would be the fifth. I have a rule on my daily and weekly. I don't trade anything past 5. I just don't. If this goes, resets up again on the weekly, everything's done. I need the weekly to reset. I just do. I don't know why. I just do. Nah, I do know why. Extended markets lead to late entries, and late entries lead to being on the wrong side of the market. And being on the wrong side of the market leads to you losing money, and you losing money leads to distorted emotions, and your distorted emotions lead to risking more and taking more trades. And then those two things are the two biggest reasons why people don't become profitable in the markets. Okay? Okay. So this here I like, because although it failed in the first candle after the failure of the MA, it reclaimed the MA. So I really like that. Just taking a look to compare this accumulation on the daily to the prior ones. It's always good to compare. Look, what I considered resets was big drops under the MAs, right? This was considered a reset. This isn't a big drop. This was considered a reset. The moving averages are kind of sloping down, whereas these moving averages are kind of going up, right? So this is like a downwards move compared to an upwards move with MAs going up and then MAs going down. This one here, same thing. Close under the 20. Then the next couple candles were down. Closed under the 20, but after an up move. This is a close under the 20 after a down move. So big differences there. Just something to know. Came up, failed with a down move. So up, up, failed. Up, up, failed. I'm just noting this because, like I said, I'm trying to, like I said, in my own trading, understand certain scenarios and certain, I guess, variables that lead to price failing. And these obviously in these areas led to price failing, where price made a move or MAs kind of came up, then moved down. Now the MAs are moving down, then coming up. Two major differences there. So I would actually look to up, down. Yeah. I would look to get involved here. This would be the accumulation on the 1 hour. This would be hopefully a first high to target on the 1 hour. Yep. This would be the first high to target. We're looking to liquidate this range. Drop down to the 10-minute. Get some sideways action. Pause in price. Play it out. Just fails. Comes. Creates a pause. Ooh, is that a... This is far. I wouldn't trade this. That's so far from the MAs. Look. Look. Note where this 10 MA is towards the setup. So this is where the setup would be. Let me get rid of that. This is where the setup would be. Enter mean right there, but the MA is so far. Look at the last entry. It's literally on the MAs. That's a big difference, right? So this is happening in kind of an overextended market. I wouldn't trade this. I'd wait for something to come on the MAs. This looks good. That's a trade, right? So this is either going to go or take me out. Let's figure out which one, right? Because at this point, once the market takes you in, once the market taps you in to your entry, there is three things that are gonna happen, and three things you have to accept. Okay, this market is either gonna take off and lead to a small win or a big win. The market can take you in, tap you in, play around, and lead to a break even, or the market's going to tap you in and then take you out right away. The chances of your setup working are random. And it's the losses. How well are you able to take a loss? That's going to allow you to grow your account because, your system, your win rate, which has nothing to do with your profitability, by the way. Oftentimes, traders with lower win rates are more profitable. Your win rate, stop focusing on your win rate, especially at all these support and resistance traders that think a higher win rate is leading them to more gains, even though they're taking 1R out of the market every single time. Maybe 1R meaning 1%. I know traders that don't even take profits until 10%, 15%, right? And they're able to take the losses necessary until they finally get a trade that instead of doing this, does this. And once the market does that once, it makes up for all of your losses. Now, don't get me wrong, a higher win rate, absolutely you can be profitable. I know traders who are profitable with a higher win rate, who take less R out of the markets over and over again on a daily or weekly basis. Totally possible. But stop associating your win rate with how profitable you are. My win rate personally is 33%. Seems like whenever I backtest, it's always right up above 30%. Okay. So since I'm tapped into this trade now, there's a 33% chance it loses, 33% chance it break evens, and a 33% chance of a win, all adding up to 99%. Okay. So let's see if this delivers. Takes me out. Who cares? So this trade was a loss. And there's nothing I could have done. Looking at this trade, it was kind of loose on the 1 hour, but I mean, everything was met. This, if we copy paste this over here, the same thing could have happened, literally. What would you guys would have done if that same move that happened down here happened right here? Well, everyone calls you a genius at that point, right? They're like, how did you predict that? I stuck to my rules. My rules said if the market does this, I can enter it. Because based off my entry, I'm always entering in an area that has a chance at continuing a move based off a higher time frame. And once you're a part of that higher time frame story and you get it right, then you're going to be in that move and it's going to allow you to extract profits out of the market, whether that be a small amount or a large amount, right? Very personable to how you're trading. Okay, so the 1 hour rebreaks up. We can get a pause down here, which we do. Let's look at the daily. I would consider this all one. First high that's being ran on the daily. And then, yeah, this has an ability to move a lot. The 1 hour rebreaks up right here. 1 hour rebreaks up right here. Creates that first high. I repeat myself so much in this video. So funny. Creates that first high. Inside that daily first high that's being ran. And that 10-minute is going to be moving sideways and create that first high. Oh, this is a beauty trade, but it doesn't meet my rules. So you have this high right here that can be buy stopped. Oh my god, this is a beauty trade, but it doesn't meet my rules. This looks like it wants to take off. This looks like it wants to go. and it doesn't. Oops. Okay, so 1 hour fails, even though it looked like it wanted to freaking explode there. Now, this market's very close to invalidating on the 1 hour. This, yeah, done. 1 hour is done. Need to rewait for a break. So this 1 hour is looking kind of weak. Like it keeps, so made this move, down, bearish, accumulation, bearish, accumulation, bearish. On the daily, you're going to see that after like 1 or 2 up candles, it oftentimes moves down, which the 1 hour is proving pretty choppy. But based off these moves here and where we are, it could be building up for a bigger move. So this market is still worth looking at because if you get it right once, it could lead to like a pretty big move. So you have that accumulation here. 1, 1. Does it fail? Oh my god, it fails. This is definitely under the moving averages on the 1 hour. Yeah, fails chop. Oh my god, this market is kind of gross. Up, down, up, down, up. I don't know. This market looks everywhere. Yeah, I don't think I would trade this. I honestly think, based off my recent studying, when market kind of keeps feeling like this, it can go, but oftentimes it's just gonna continue going like that. This looks choppy as fuck. I'm gonna step away from this market, especially after this big sell. Wasn't even clean high. Yeah, fails. Was there an entry there that I missed out on or dodged? Not really. Never buy stop this. This would have been my entry here if I was looking to trade. Yeah, that was actually ugly as hell. You could tell. You can literally tell when a market like wants to break down because the lower time frames just turn ugly and they move in a way that like isn't what you're used to. And you can like sense it, right? Because after all, the market is just a display of human emotions on the buy side and the sell side. It essentially shows you all types of orders that are coming into the market. And when orders are moving in a more sporadic way, it shows more indecision. And at times of more indecision, where the market's not showing one clear side, that's the perfect time to step away. Okay, so this is looking weak now. Look at this. So we have these pushes, but this push led to here, which was clearly still like, you know, making higher highs and higher lows. But once this low failed and then this push came down, the daily is probably more. Yeah, this thing wants to break. The weekly wants to reset. More sideways action. Kind of like this here. So the daily went up, failed to take the high, came down. The only difference is that this second time it came down is lower on the daily, and on the weekly, oh, it's actually lower on the weekly too. The MAs are just a little bit cleaner. On the daily, the MAs, actually, the MAs aren't even that bad on the daily. They're both sloping up. Yeah. Markets always break down in weird ways. Takes a low, comes up. 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 Takes a low. After taking low, let's just let this reset. So that is a reset. Just sideways. It was a sideways pause. Yeah. Want this to reset now. like this. There. Now we're exactly where we started. So this first accumulation leg on the weekly, which this should actually be a 1. This was the first high. This should be 2. I was wondering when I did it. I was like, sometimes you make mistakes in trading. It's not that deep. Then you have this same thing repeating itself right here. Almost like same length moves as well, right? Then you have the daily resetting. Choppy. Oh my god, this is choppy. I want this to move away from this area. Come down like that. Accumulation on the daily out of this area here. Comes down, creates that first possible high we can target on the daily. 1 hour hopefully resets. Yes, it does. Moving. A little bit of a sell here. Just going to replay that. I want to see if I would have read the sell there. Oftentimes when you're in trends, it stays above the 10, right? So trend kind of above the 10. Comes to the 20 sometimes. Let's go to daily. Above the 10. I don't know. Just when you're calling for a reset, like when this happens, it's honestly kind of just like a feeling. When you know a reset's going to happen. I mean, even here at this point, no setup even came, and then the MAs are just kind of going sideways, and you're fucking overextended a bunch. So yeah, you can almost assume that. This is beautiful. Oh my god. 1 accumulation through this point on the 1 hour. Same thing that's happening over here on the daily. Creates that first high to target on the 1 hour. Let's see this. Boom. Boom. Fails. Chop. Chop. Fails. 1 hour is invalid. Comes up again. Does it create a boom? Accumulation. Fails. Boom. On top of that, let's keep it momentum. Gotta be honest with myself here. These rising. This one's tough. This one is pretty tough. My entry would have been. I'm trying to tell if this is rising. Because either way, I get an entry here, right? I either take the first one or I take the second one. But if I consider this. So this would have been the accumulation through this point here. Comes up above the MAs, creates that first viable high. You have a high. You have the 3 candle setup being met. So you have a high. Let me make sure that this high is that high higher. It's kind of the same. Looks a little higher. It is a little higher. You guys can see that, right? Wait, is it? Am I tripping? Okay, maybe that high is not higher. So that actually did not meet my rules. So let's go back. So this, Rise EMAs, you have a high first candle. Let's see how this setup was made here. So we had a high. Sometimes these candlesticks can be like, play little mind games on you, you know? So high comes down, opens here, comes up, it looks like, validates that. So high and then back down. Can I go on a lower time frame here? Am I too March 2025? Maybe like a 5 minutes available. Oh, nice. Okay, cool. Boom, boom. Yeah, like I know on lower time frames it's met here. I'm just looking to see. Comes down, validates, then closes here. Okay. Yeah, no trade. I mean, I don't see my rules being met. Like, this pretty much meets it, but they were both the same high. I don't have a high. Comes down, validates. And then you have this here, where it's like, okay, you have a high here. Comes down, boom. Then, so you have a new high. This would be the new high. Then it takes out the low from where it opened, and then validates, right? So I wouldn't have caught that, but I would have caught this. So accumulation through that point. You have a high. You have a candle that takes the low. Then on the third candle, it validates you in. So that would have been a trade. That meets my rules. These ones didn't meet my rules. I was honestly thought this one would have, but it did not. It's always important to be honest with yourself while trading, right? Because after all, accumulation could have happened out of there, or it could have happened out of here. These moves weren't even big enough, really, for me. Maybe something I could have considered. The MAs were like questionable on this one. Second one cleared up. That one was good though. Yeah, that's pretty much the first win. First win after frick months. We're in March 2025. I caught 5R on that. I take full profit at 5R. So would have been 5R right there in the matter of three or so candles. I didn't put the labels for the 1 hour on here. You have the accumulation out of this area here. Then you have the first high to target. Yeah, I think one thing I need to work on my trading is getting involved in these first legs. Because you'll see here, if this accumulation and then buy stop, the first high, that's exactly how my 10-minute looks, right? So you have that accumulation in this area, and then you have that buy stop of that first high. But yeah, guys, I think we've been going, how long we've been going here? 1 hour, 34 minutes. I think that's good. I think I'll wrap it up there. By the way, if I'm getting tired, I like to end these out on, a profitable stand, because it shows that, I mean, if I ended the video before I took this trade, or before that trade met my rules, then it would have been a negative backtest. But it's good to see, because if you guys can understand that, you're able to make up those wins and losses, wins and break even, losses and break evens you do take when your rules are met, and that just doesn't play out to your liking, that eventually you are going to catch a win that makes up for your losses and break evens. And that's what trading is about. Trading is about, staying in there for the losses and, finally being there for the wins. And all those losses are erased on the equity curve and you're at new all-time highs and you're able to withdraw a little bit, keep the rest in your account to compound it. And eventually your account becomes bigger and bigger to where the amount of money you're making like exceeds the amount of money you actually need. And at that point, that's when I guess you could say, you know, trading's great and you made it. And, that's the end goal for all of us. But yeah, hope you guys enjoyed the video. Thank you guys for sticking around. We're only in March here, so I'll show you guys. I probably know what's going to happen. I don't even remember what this market looks like, but since it's moving bullish here, this trend probably continues to play out. So it probably does something like this. Maybe it resets and then does it again. It's going to do something like this. Watch. Kinda, not really though. It actually becomes a really sporadic market. It kind of looks like how the daily did down here. Kind of goes, fails, goes, fails, goes, fails, goes, fails. I guess that's why it didn't honestly didn't lead to that many opportunities. The daily wasn't like the cleanest. Daily, boom, fails, goes, fails, goes, fails, goes, fails, goes, fails. Clean right here. Goes, 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 fails, goes, 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 fails, goes, fails, goes, fails. And at that one point, that exact price action is what happened, I believe, right here. This is how I knew the weekly was, or sorry, the daily was going to fail because the 1 hour was doing this. So the weekly, I mean, if the daily's doing that, it's kind of like this weekly is probably going to break down. Oh, we don't have enough data. So yeah, this weekly is probably going to break down soon. Because, I mean, if the daily remains this choppy, where it's just failing to like put in like consistent moves, eventually it's just going to give up. It's just going to roll over. Yeah. Thank you guys for watching the video. Next backtesting video, I'm going to try and do something a little bit different. If you're watching this like years later than when it's actually uploaded, we're at a point in kind of the YouTube channel where a lot of these videos are just for myself. I don't really expect someone to watch these videos right now and be able to take it A to Z for themselves, but it helps me by recording what I'm doing, and it'll help other people who, maybe stick around for my journey later on, kind of the development process that I went through. But once I'm able to, teach in a more constructive way and maybe, slow it down, once I have a community answer a lot of questions, break down many other things, because it's kind of hard to run into a lot of different scenarios to answer when it's just myself kind of doing the same thing over and over again because I have the system already built out. But when, other people are kind of in the learning process and have questions about anything, like literally like, okay, Brad, why at this point here did you not look to get involved on a lower time frame? Well, I know that the lower time frame was already moving bullish for quite some time, and at that point it becomes overextended, and I want to wait for a pullback to get involved, right? So at this point, a lot of these videos are just for myself, to stay, accountable with the ways I'm trading, see how I can improve, and then for a lot of people in the future, if you're, watching this, I guess you're watching a very OG video, and we're probably at a much different point than what we once were, meaning right now. So yeah, if you are watching this, like, subscribe, stick around. We plan to, turn a lot of traders profitable on this channel. We hope to save lives or change lives, and we will change lives. And it all comes down from, putting in the work right now. And that's what I'm going to continue to do for you guys. Whether it's just you sticking around for a boring hour-and-a-half video to see what tips and tricks you can pick up from me, or it's, just trying to find a mentor you can rely on. Yeah, I'm going to try and be everything for you guys. So yeah, like, subscribe, and I'll see you in the next one.